But yeah, I think generally the market has been kind of choppy, and I think the market is now tired of any headlines. The market is not reacting. I think there was last week we had Trump come out to say we are negotiating with China. We have all these countries coming to beg us, and then China came out the next day and said, "Well, we're not having any conversation." And the market took that and said, "Well, we don't care what you guys are doing."
Frankly, I thought it was gonna be another ready, and I was
It's
shocked.
like we don't care. Go sort yourself out,
Yeah,
and
I'm like,
we're
yeah,
gonna
go
keep
speak
buying
to
the
the
stock,
guy.
and we're going up.
Mm-hmm.
So
Mm-hmm.
the market looks like we're just. I think we've peaked in terms of the bad news cycle.
Yeah.
Something crazy has to happen for us to have another downtime. And look, I'm not saying that's not going to happen. It probably can. But right now, I think everybody's just realized that the flip-flop is not going to end. We can't keep buying and selling based on somebody's tweets. Makes no sense. The what I always preach is, as far as investing is concerned, buy and hold for a long term, and you almost never go wrong. I mean, it's still a risky investment, but you give yourself a better chance of success in investments in the stock market if you buy and hold for an extended period versus you trying to buy news and sell news. It just doesn't work, to be honest.
Yep.
But
Yeah. What do we have
uh,
today?
we'll see. We'll see what next week has in store for us.
Oh yeah, I'm so looking forward. Futures don't look to be, you know. Let me not make
Oh,
any comments. We'll see. Yeah.
yeah, I think maybe we'll jump into this week's episode. Last week we did have some conversation around uh investing where the puck is going. You don't want to be at the time where we're having the transition from Blackberries and to like smartphones with Apple. You don't want to be the one investing in Blackberry. You want to be the one investing in Apple. And I think there's a lot of generational changes going on in the economy like we know it. And I think we identified them last week as AI, robotics, space, energy, and then quantum computing. And in all of these areas, there are quite a number of things going on, and the rate of change is actually very impressive. It's like really fast. And so I think we had that conversation last week to say, look, we need to talk about this, let people have understanding of what is going on in these spaces, and also just provide them with some guidance and some information around what are the kind of stocks that are or companies that are operating in this space, and then people can make their own investment decisions. So with all of that, I think this week we're probably going to start with AI. And then in subsequent episodes, we're going to um, we'll touch on all the others like quantum and the rest. So as far as AI goes, what are your, I mean, maybe I'll throw this to you. What are the trends you're seeing? What are the changes you're seeing in terms of how we work, how people use some of these tools that you think would drive the value that everybody talks about with AI?
Super exciting. It's like you said, the rate of change is just insane. It's been a long time coming. Um, and I think things are only just starting to shape up. Um, I was reading a couple of days ago, I was reading a McKinsey article on AI, the state of AI, published last week, and they referenced the fact that they had done a survey, and there were so many sort of teams around what they were trying to find. And one of the very shocking news is more than 70% of the respondents from that survey think or declared that their organization um, use AI significantly in at least one function.
Hmm.
Um, and we're not just talking large organizations. This is, so this is for me, I think this is real productivity gain. It's not a joke.
Mhm.
It doesn't look like a bubble to me. Maybe it's too early to say. Um, but I mean, it's when you even think about your personal life, we're seeing leaps in productivity from just the use of AI, in everyday. Uh,
I hardly go to Google for information search right now. I just go and Grok immediately.
mhm.
Yeah.
Yeah, so just on that McKinsey sort of report, so 78% actually declare the organization use AI in one or more function. 63% declare the organization use AI in two or more function, three or more function, 45%, and
Oh,
and so on and so on. Um, and one of the bigger findings from that article is the fact that organizations are now beginning to create structures and processes that would harness the value from AI. And they are you are seeing people redesign their workflows. People are starting to make governance decisions, thinking about risk from an AI point of view. I don't know if you saw that tweet from Shopify CEO.
yeah,
Uh,
yeah, I did.
I think,
That was
yeah,
interesting.
for me that was another sort of it was a for me it was a big signal that, man, this is not a joke. So there are four major takeaways from me from from that sort of tweet that yeah
Yeah.
he had made. And the first one is the fact that he's now making AI a mandatory tool for everyone in Shopify. So it's no longer an optional thing. It's not something that is nice to have or good to have. You don't have a choice. So that's sort of a significant cultural and operational shift from where we were before, right? Where, if you know how to use it, ah, that's good for you.
Yeah.
People are not demanding that you have to use this thing. And then he also made a very funny line there that before you can come to him to ask for more people or more hires, you need to justify why AI cannot do the job that you are trying to hire for. So in
That's
every sort of new product, new hiring, new launches, how are you using AI here? You need more people. You need 50 hours or 50 full-time, employee equivalents. Have you considered what AI tool could actually do this job you're needing those hours for? So that was another sort of takeaway. He also talked about the fact that you need to now use AI in product development. You need to, rather than waiting until you've built the product and then say, because right now we're using AI. AI seems to be like an afterthought, right? For products that have been released now, and he's saying no, it needs to start from the very, very
Mhm.
initiation stage for your product. And the fourth of the point is performance. Is mandating that, not mandating. So you're saying AI is not going to become a criteria in performance reviews. That's insane. Um, that's insane. So when you're evaluating your peer or your manager is evaluating you, one of the elements of that evaluation is your use of AI, you
Hmm.
know. Um, so these are things that, for me, when I peer what is happening in large organizations, now if we say, okay, these are large organizations, um, what about smaller businesses, right? I saw a news from entrepreneur, I think it's an entrepreneurship and blog that was saying that people are eating $1 million in revenue with zero full-time employees.
Correct.
So they are automating their web design, ad sales, sales outreach, customer service, everything is being automated. They are reaching $1 million, by the way, is a massive milestone for most companies.
Correct.
And you're doing this with
Without,
free
yeah,
free tools, that's insane. And I recall when we started our pod as well, like everything you're seeing, all of the sort of artifacts you're seeing on this pod, everything is made with AI. So that's crazy, crazy productivity gains that we're talking about here. Um,
yeah, yeah. It's definitely, and I think that's one of the reasons why it's difficult to mention and say that this is a bubble because you're actually seeing like productivity gains and it's not just like the dot-com bubble where you have companies spring up without revenue, they just sell you dreams and think, well, we're gonna give you $1 billion valuation just because you said you were gonna do something. So Yeah, I just think this, and I know people always say, "Oh, this this time is different," but
Yeah.
I really do think that this time is different. But yeah, we'll see, and I think it also depends on what are really the opportunities around AI in terms of like a growth perspective, like how much growth are we really looking at here? Like, what's the size of this AI industry? Are people willing to still make investments, you know, and things like
Yeah. Yeah. I mean, that's a funny question, right? So I think there were lots of conversations last year, before ChatGPT went viral. Was it last year they went viral? I think so.
that?
23 Q4 23, I think.
Was 20, yeah, 23 or 22. Yeah, 23.
Yeah. Yeah, I think Q4 23. There's been this massive infrastructural investment to build that
Mhm.
infrastructure that sort of, underlies or underpins AI products that you're seeing now. And the general consensus then, because people kept saying you're buying all of these things, building massive, data centers. You spend billions over what, maybe 1 trillion of investments. This looks like a bubble. We're not gonna see, any dividends from this all of these investments. Um, it's not looking that way anymore. If you sort of think about the things I just said now, you know that definitely the investments are looking like they are worthwhile. McKinsey recently forecasted that the gains from just productivity alone is going to be about 4.4 trillion. That's the size of not Silicon Valley, the entire California.
Mm.
That's higher than the size of the fourth largest economy in the world. So largest economy is the US, followed by China, Germany, and then California. California is 4.1 million. The gains that we are forecasting here by McKinsey is 4.4 million.
Trillion?
Um, Trillion, sorry, yeah.
Yeah.
Thank you. A trillion. So, and this is not sort of accounting for, I don't know how many years we're looking at, but it looks like near future to me, you know. So
Yeah.
this is a whole sort of industry. It's big. Um, Uber's founder, I don't know if you know this Kalanick guy. He said
Sure.
something recently. Yeah, he said the AI industry is bigger than the dawn of the internet. It's bigger than um smartphones. I mean, he made so many comparisons, and it's like all of these things are 12 or they are nothing in comparison to what he's saying. And these are people building, for the future. Um, so yeah, like I can't put a number to it right now, say 5 years, where we're gonna be, but yeah, it looks crazy.
Yeah.
And we're still in early phase, by the way. We are not, if you're wondering if the boat has sailed and it's too late, I think that's not the case. It's only just starting. This is like maybe 96, 97. This is like the .com when things were really, really sort of soft, just in the middle before things play out.
Yeah. So I guess the next question will be, are we in a bubble or is this that or are all these valuations justified? You
And
know?
that's fair, yeah. It's fair.
Um,
How are
but
you
what I
thinking about
always
that?
say to that is for most technological advancements,
Mm,
it almost always creates a bubble because there will always be a mismatch between financial expectations and what is actually happening in reality. And I mean, if you think about what a bubble is, it's like this divergence between what your market value is and then what your intrinsic value is. I mean, like for reference, in the 2000s, right, the dot-com bubble, we had we had companies trading at 200 times earnings. Just think about that, 200 times earnings. I think Cisco, which was essentially like the Nvidia of that time, providing like networking equipment to companies building out the internet. And I think they, at some point, at the peak of the bubble, they were trading at a 230 times earnings.
See,
Same thing for electric vehicles in the 2021, 2022 period when electric vehicles just became popular. You
the
had
Industrial
companies,
Revolution.
yeah,
Oh, electric vehicle. Okay. Yeah.
electric vehicles. So you had companies trading at 1,500 times revenue, not even earnings, revenue. It was insane.
Bloody
And
hell.
guess what? Most of those companies are now bankrupt. Fisker is bankrupt. Nikola was accused of fraud. So the share price has diminished by over 90%. Neo has diminished over 90%. So when you have new technology, and then you couple that with people's ability or willingness to acquire assets because they just have too much money in their hands, you just kind of inflate asset prices. But I really do not think that that's what we're seeing today. Um, and it's for a couple of reasons. First is the companies that are really doing the heavy lifting with AI are really large organizations. So you think about whatever use case you want to create, LLMs, right? Other than OpenAI, the majority of the companies that are not just building wrappers around LLMs, by the way, the ones who are actually creating it, Llama by Meta, Grok by XAI, Gemini by Google, Copilot by Microsoft. Like, so for them, this is like what they do on a regular basis. They all have like incubators and things like that. So they just are signing a portion of their funding to these projects, right? And when you look at Google, for instance, okay, Google are self-driving with Waymo. How much of Waymo's value do you think is actually priced into Google stock right now? I would argue
Absolutely
zero.
nothing. Absolutely nothing.
I would argue zero. So,
Absolutely nothing.
so yeah, if Waymo was a standalone company and it started to raise money, um, publicly, maybe not publicly, maybe if still privately, it would be in the billions of dollars in valuation, right? So when you put that relative to Google, who is trading at close to about $2 trillion, it doesn't mean anything. So you wouldn't see that bubble effect in the valuations of all these companies. And I think that's what we're seeing right now. Um, and then if you look at another company like Nvidia, who is like building this out, they're currently trading at 34 times earnings, which is pretty much normal. And then if you look at forward earnings, I think they're trading at even 20 times earnings, So it doesn't look to me like that is a bubble because the valuation are reasonable. And then if you think about the private market, you just mentioned it, some companies are doing $1 million in ARR and things like that, and even MRRs. So there are productivity gains, there are tangible outcomes that are coming from this. Now, if you then look at, say, an open AI, then you might start to say, well, this valuation is a bit, it might be a bit high. But of course, like they're gonna sell you dreams in terms of how much their revenue is gonna grow. So I think the last funding round, it was valued at $300 billion. I think the revenue is project for 2025 is projected to hit, I think, $12.7 billion. So that would give you like a 24x from a revenue standpoint. Now, that might still be high relative to some of the tech companies that we have right now, but it's nowhere near the 100x or 1,500x that we're seeing. And then if you look at the promise, which is by 2030, they're saying they're going to hit about $174 billion in revenue. That is crazy, by the way. Um, so if that actually happens, then it's difficult to make that argument and say, well, this is a bubble, you know. So yeah, I mean, we'll see how everything kind of pans out, and then over time, I just think that the productivity gains in this case will almost certainly match whatever inflated asset prices that we may have right now in the private market, because we're not seeing it in the public market just because the incumbents, the large hyperscalers are the ones um, doing most of the capital investment here, and they have existing revenue and even internal gains as a result of using AI. So companies like Amazon, Google, Meta would use AI to optimize their advertising business such that they're able to match, merchants to customers more effectively. So yeah,
By the
that's
way, it's very funny you mentioned that. So I'd seen one of the reports from um I don't know which consultant firm again. One of the top use case for AI, not
mhm.
one of, they listed lots of the top use cases. So in terms of functional areas in companies, I think things like strategy and finance were at the very bottom,
Yeah,
supply chain. At the very top was sales and ads, advertising and sales, marketing, sales and ads. We're number one,
yeah,
with like maybe 60 to 70% use case for AI.
yeah,
So it's super funny you had said that actually. Yeah. How are you? Yeah. So we've talked about sort of like um the fact that this doesn't look like a bubble. I
yeah.
think one other thing about how on bubble like allow me to use that this is you can actually see real gains.
Oh
So with
yes.
the dot com, people were just doing stuff, right? No profits, nothing. With
We had like
Nvidia, like
7,000 to 10,000 companies come up, and I think about
yeah,
70% of them failed within a
70,
couple of
that's an
years.
understatement. Like I'm sure
Yeah.
like maybe 90 or some crazy number
Yeah.
failed. Yeah, so if you look at companies like Nvidia, like they've pushed massive profits already out of this. Um and so yeah, this is not what a bubble looks like to me.
Yeah.
Um
And I think
yeah.
the question that most people also ask me is, especially because like Nvidia has suffered some decline in the last couple of months and weeks, is this the end of Nvidia?
Mm,
Nvidia's run, because I mean, Nvidia's shot up ridiculously over the last, I don't know, 3, 4 years,
mhm.
5 years. And then the question is like, are we done? Is there still room to keep going? So for context, I think for me, it was during COVID. I started to take up a couple of courses in machine learning,
Yeah.
and I was doing a bit of predictive modeling because at that time that was what was raining for AI. It just predicts
It
models,
was yeah, analytical models,
Yeah, like those
predictive
very
models.
basic
Yeah.
things that we
Is
consider really basic right now.
yeah, yeah.
You know, so then it's like, oh, you have this gender, this number of people, this is how
Yeah.
will
I think
come in a week, predicts whether they're going to be,
clustering, we're using things like
yeah, that
clustering,
was very basic.
k-means. Yeah.
So yeah, it was during COVID I got my first exposure to that, and I just found it very interesting. So I went into this a bit of a rabbit hole, trying to determine what the value chain is, and maybe we'll get into that in a bit, but and and from an investment standpoint, like what are the companies that I think are going to win here? And I always landed at two companies, which was Nvidia and AMD. Now, I did tell everyone who cared to listen to me at that time, like, just buy both, right? And the reason I say that is I could not predict who was the winner, who was going to be the winner at the time. And I didn't have a differentiated opinion to say, I am certain Nvidia is going to win this or AMD is going to win this. Now, in hindsight, it was clear now that Nvidia won it in terms of like training. Um, but like I always say, in the absence of a differentiated opinion, your best thing, the best thing to do is to diversify. And in this case, just own both, such that if one outperforms the other, you're still made whole. Um, so I just felt like Nvidia was going to win this. Now, Nvidia has obviously won the race in training, and just to kind of provide that clarity, like models have there are like two ways to think about it. The first part is you have to train the model with data, right? So you need all the GPUs to train it. And then after you've trained it, then people start prompting it, and then it starts giving out responses. Then that is inference. So you're drawing conclusions and getting information out of the data that you've trained. Um, so I guess the question now is like, Nvidia's share price has grown, I think since when I was telling everybody in 2020, it has grown like 8x, splits adjusted. It has gone 8x since then. There might be some people that owe me lunch for giving them that tip, you know. But I think the question is can Nvidia sustain this going forward? Now, my response would be I'm not very sure. And I know that is very ambiguous, but I'll explain. So I think the first thing is maybe we'll start with the positive. Nvidia is not just a GPU company. Like they're not just designing chips and giving it to TSMC to build. Nvidia is a compute company. Um, And if you think about what you need, so they do this GPU, and they also have the software that kind of backs that up in CUDA. And you can almost argue one of the core reasons, apart from some of the performance superiority that their GPUs have, one of the other things that also help them just own that entire space is the CUDA platform, where engineers can build their models through. And that's what AMD is actually trying to build now, such that they can compete with Nvidia. So, and then you also have them partner with like all this medical research companies looking into drugs. You see them partner with GM, trying to train
Robotaxis,
for autonomous vehicles.
autonomous vehicles. Yeah.
Yeah, and creating this omniverse where if you think about Tesla's approach, Tesla is looking at is taking data from customers that drive their cars and then improving their models through that process. Nvidia is saying, I'm going to create synthetic data such that I don't need the cars on the road per se. I can create this virtual reality such that it kind of mimics and simulates what the real world would look like. And then I can train my autonomous vehicle software based on that, right? At least to a very large extent. So they have all of these several things going on that I'm just not convinced that it's just a company that just sells GPU, for instance. So unlike Cisco in the 2000s, because I know that's one of the comparisons that people like to draw. It's like, oh, Nvidia is just a Cisco of the 2000s. At some point, people will build out their capex and won't need um, Nvidia anymore. Now, I think this time is different. And I think that because one, they're just not selling hardware. You know, they're just not selling networking cables and routers and things like that, like Cisco did in the 2000s. I think they're like a full-blown parallel compute company, you know. So they look at the entire process, like going into robotics, going into self-driving, they're everywhere, essentially. So I do not think they're gonna lose their relevance anytime soon. I think maybe on the negative side would be the export controls that they have on some of their products. Now, as you know, AI is becoming a national security issue. It's a case of it's no longer a company to company competition anymore.
It's an arms race.
It's an arms race. It's a
Yeah.
country to country competition. And from the US perspective, they think that they have the best compute in terms of designing the chips and building out the chips. And some of those players are essentially their allies. So what you found is that even from the Biden administration, the Trump administration is just trying to put a limit to how much of this computing power that you can send out to China, such that they don't have the same capabilities that the US companies have. So we're seeing that play out, and I think Trump just announced some restrictions. I think that they specifically designed a chip that has lesser performance from the regular chips, which is, I think at the time, maybe it was
That was
1800
crazy,
or
actually.
1800. And
Yeah.
then they built an H20 for the Chinese market. And now
And
Trump is
then
saying, even that H20,
we don't want it to
you
go
don't
anymore.
want you selling it to China. So now I think Nvidia has estimated
And
that
guess what? China is yeah, creating all sort of schemes to get its chips into the country, routing
exactly.
them through
There's been
Vietnam,
allegations
Singapore.
that, yeah, like routing it through different systems, countries. And I think another thing is scarcity is like the mother of innovation. When you tell me you're not gonna give me your chips, I'm not just gonna fold my hands and say, well, okay, you're not gonna give me my chips. I'll never do anything with AI. What that then does is they find arguably more efficient ways to get the same results like you do. And we saw that with DeepSeek, right? So I mean, right now, export control at least is still a problem for them. And I mean, I just think it would be a headache in the near term at least. And then we'll see what happens in the long term. And then another thing is right now, Nvidia has, like I said earlier, has won the training war in terms of what chip designer we're going to use. Now, I think the next phase is really the inference. And I'm just not convinced that Nvidia wins this. And the reason I say that is for now, Nvidia's margins, like net profit margins, about 55% or something like that. And then I was listening to Andy Jassy recently, and he said the major chip maker is making AI build out very expensive. And the only way to make that come down is through competition. What that means is that we're tired of Nvidia having a monopoly here and charging us arms and legs just to get this crazy GPUs, right? So what that means is big tech is now getting into building their own GPUs. Amazon is doing their own, I think it's Premium. Google has their own CPU.
Tensor processing units, yeah.
Tesla has Dojo. Like
Yeah.
everybody is building something out. Meta and Microsoft have started their own as well for it. So the dominance that Nvidia has with training, I just don't see them having the same level of dominance with inference.
Inference.
Because companies like AMD and Intel are also scaling up, building software platforms to kind of support that inference market. And I think the big tech companies are also tired of Nvidia's arguably excessive charging. Because if you're having net margin of over 50%, I think that's
It's
just
not
crazy.
their fault. I wouldn't call it
Yeah,
excessive.
it's
It's just
it's
demand and
value
supply,
pricing.
right? Yeah, yeah. It's
But
everybody
what
wants to
that
buy
does
this
is
stuff. How do we make it, mine it?
yeah. So I don't see them having that inference market. So at some point, I feel like we'll get to training data center um saturation where companies have kind of built it out to some point. We might see it as a continuous build out in terms of the hyperscalers going in and doing some, I mean, thinking of it as a cloud service for people to train their own individual models, but I just feel like there are gonna be other winners in the inference market. So I don't think that current growth trajectory that we're seeing where they are doubling earnings year on year is going to remain the same. So I would seek to diversify away from Nvidia a bit. I'm not saying sell everything, but I would diversify a bit into companies like AMD. And one of the other reasons why I say that is Nvidia is worth about $3 trillion. Nvidia, I mean, AMD is what I think around $100 billion. If we assume,
Max 150, I think. Yeah.
yeah, so if we assume that the chips market for inference is $3 trillion, if Nvidia gets 100% of that market, what that means is they just double their money, right? On the other hand, of that $3 trillion, if AMD gets 10%, that's $300 billion. Then they 4x their investments. So for me, a smaller company in this space just provides better growth opportunities from an investment standpoint. Um, and I
I like the
mean,
fact that you're talking about this because we're gonna get into this later in I think this is something we need to talk about at scale. So I'll be keen to for us to
yeah,
land on a conversation around where the best investment opportunities are and how people
yeah.
should
So
think
I
about
think
investments. Yeah.
there will definitely be threat to margin. So like I said, everybody's building it out. At some point, when competitors get into this market that are providing the same performance I mean, there's gonna be trade-offs, but largely similar performance to what the GPUs are doing from Nvidia are doing right now. I mean, I really just think that at some point Nvidia is gonna lose that competitive advantage that they've had over the last couple of years.
Interesting perspective actually. Yeah, I think definitely it's we keep saying there's something around diversification of portfolio. It shouldn't just be industry. It should also be in terms of cap. Nvidia is what 2.8, 2.7 trillion.
Yeah.
You wouldn't just want to put all your money there. You want to look for, so that's like a mega cap. You want to
Yeah.
then look for like a large cap. I don't know what those thresholds are, but let's call them
Yeah, I think
AMD a large
250
cap.
billion is like
Mm,
you're now in large cap.
yeah, so large cap, Nvidia, AMD, you put some money there. So you need to not just diversify along industries within the same industry as well. You need to diversify along, capitalization of companies. It's a good framework to
Yeah.
adopt for investing. Interesting. Yeah, where do we go with this conversation now? I'm thinking, should
Yeah.
we look at the value chain?
Yeah.
Um,
Yeah.
and just talk about a bit about how things look like along that.
Yeah. I think with the value chain, maybe we'll start with the use cases, right? Um, so there are a couple of use cases, and I think the one that is a bit more pervasive, and everybody uses every day is LLMs. And everybody has their own preference. Some people prefer ChatGPT, some people use Grok, Llama, Gemini by Google,
Anthropic, yeah,
Anthropic, and Perplexity, and people who just
yeah,
combine so many models. So I mean, that is certainly one use case that I think most people are already seeing. Another one would be autonomous vehicles. So people like Waymo are already, I think during the Google earnings call, Sundar actually mentioned that they're not doing, I think, 250,000 rides every week. That's crazy,
insane,
by the way.
insane,
But
insane.
and then you have companies like Tesla who are promising to start in Austin in June.
June,
You
yeah,
have Zoox by Amazon. So there are many players in this space as well. So it's LLM, self-driving. Another one is humanoid robots. Again, I think the only publicly listed company that does that right now is Tesla. So you can already see where Tesla is. Tesla is in two of the probably the most important and the biggest
yeah,
market in that will be the biggest market in the world in the next decade at least.
yeah. If you're
Um,
thinking about what sort of 10x opportunities do you have now, and which companies are, instead of trying to solve those
yeah,
opportunities, it's Tesla, definitely.
yeah. I mean, it comes with the risk and a lot of bouncing around and volatility, but I feel like people who have held Tesla since like 2013 are built for that already. There's always this meme where people talk about people who hold Tesla as having balls of steel. Because you could see a 10% drawdown today and then tomorrow is 15% up. So yeah, humanoid robots and I think AI services as well, like the big fours, the Infosys and all this Accenture. I think Accenture is gonna have a really good role to play in that. And then I think broadly speaking, just AI agents, your chatbots, your CRM, a lot of those things are just going to be automated. And like you said, you have companies that are doing $1 million in ARR without employees. I think that's where we're heading. I don't know how this plays out from a human standpoint because, I
From a
mean, some people
socioeconomic implication point of view,
Some people have floated the idea of UBI, Universal Basic
yeah,
Income, where it's
yep.
like we can't find jobs, just give us money to
It's
survive. And there's some people that take the other side of that argument to say, with every new invention, there's always new ways to do things, such that you're gonna. So, for instance, with the advent of the internet, you had companies like DoorDash, Uber come up, and all of a sudden they employ all these many
the
drivers and
gig
things like that.
economy.
Yeah, so I don't know if that is going to happen, to be honest, but I guess time will tell. So yes, there's several use cases for AI. So I just thought to kind of put that out there. Now, if you're then thinking about, well, what are the industries, what are the sectors that are really supporting this AI build out for all of these use cases that we kind of mentioned? Well, there are quite a number of them. And I think one, maybe the most important one is the semiconductors, right? And I've kind of touched on Nvidia a bit, but Nvidia is just one part of it. Nvidia designs chips. There's several layers to building it out a semiconductor. And I'm talking like trillions of market cap for each of this sector. So if you think about how chips are built, I mean, so somebody designs the chip, like Nvidia, passes it on to like to the manufacturing company to manufacture the chip that has been designed. And now TSMC is like leading that, taking that away. And the companies that do that are really called foundries. And we have other companies as well, like Intel, that has been doing that, even though Intel has been taking a hit recently because they just can't compete with TSMC. So after it has been manufactured, then you go out to the testing company. And then for all of this manufacturing and testing that happens, you have the equipment manufacturers that supply equipment to TSMC, likes of TSMC that manufacture the chips. And then you have other people who supply materials to build out all of these chips, and then you have people providing services as well. So that's kind of like the broad value chain. Now, and another part that is also important is like the companies that provide some level of infrastructure support. And I think one of them is memory as well. Now, for most of the chips that are being built, someone has to supply memory to that for that chip. And I think Nvidia currently uses MediaTek and Micron for helping with memory on their GPUs and then their data center build out as well. Another thing is power generation. If there's anything we know, AI is going to almost 10x the amount of electricity supply that we require, electricity generation that we currently use right now.
Yep.
So we're gonna use power, and that's why you have all these companies partnering with SMRs, which are small modular reactors for nuclear energy. We have some of them building out solar panels to kind of generate solar electricity. So we have all of that happening, and maybe and like we mentioned earlier, it's one of energy is one of the sectors that we'll dive in deeper in the subsequent episodes. And then we also have like data center providers. We have cloud computing through the hyperscalers like AWS of Amazon, Microsoft Azure, and Google Cloud. So we have all of that. And then people will also provide cooling. Because one thing is, I think with CPUs, we usually have a lot of air cooling. And I think for GPU, because of the level of compute that is required for GPUs, I feel like air cooling was just not enough. So now we're doing like liquid cooling. And we have a couple of companies that does that. And maybe we'll get into that when we're talking about how to invest
I
through
think
the entire value
SMCI
chain.
does that, right?
Yeah.
SMCI.
We'll see how we can get into that. And then maybe another part that is also then important would then be the software. So we've talked about the semiconductor companies, the people that then provide the infrastructure and they use some of those semiconductors that have been built. And then now it's about the software companies. Because I think one of the things that people miss, which is one of the reasons why I said Nvidia's moat may not be done, is that software layer that they provide, right? And from a software perspective, another thing to look at is cybersecurity. I think we can all agree that for every pessimistic view that someone has about AI and safety issues that might come up, cybersecurity plays a key role in avoiding some of those worst case scenarios. So I think cybersecurity will be very key in the long term. And we have several players. I mean, you get into it in a bit. And then we have some companies that just provide software ecosystem, data analytics platform. We're talking Palantir and things like that. So I think that's kind of like the um, broad value chain. And maybe we'll share like a, a diagrammatic representation of that. But
Yeah. Yeah.
I think that's how I'm thinking about it, and that's how I'm choosing where to essentially put my money, you
Mm.
know. Yeah.
This is super interesting. I'm really just curious. Like, yeah, it's
Yeah.
Super, super interesting, man. Um, should we talk about sort of like how people can sort of get exposure
Yeah,
to this?
absolutely.
Yeah, I think we've it almost feels. I think at this stage now, if I keep talking or trying to convince people about why this is super important, it almost feels like it's a AI hype show, which is not.
Oh,
But
I
it's
am sold. I am sold on AI.
yeah, I am so
I've used
sold,
it in my
man.
work. I've used it like, yeah, it's interesting what is going on out there. And I think that there's a couple of people that really don't even know how great this is. Like there's a term now called vibe coding. I mean,
Yeah,
it's like you type in a text saying, please build me a Tetris game. And something writes the entire thing, compiles it, publishes like the entire thing. And companies like Replit, a private company still, those are
yeah.
companies that are going to be IPO candidates in the next couple of years when as they seek exits. Um, so yeah, it's the use cases are just insane, and it keeps coming up every day. I certainly play around with it to generate images, um, and it's just great. And I think what would when people talk about oh, as AI peaked, my response is always what happens in the world where everybody becomes their own graphic designer, everybody
Mm.
becomes their own just does their own interior decorators and things like that. So yeah, the future is
It's gonna be an insane future, man.
it looks interesting for
Yeah,
sure.
every time I think about these things, I'm like, oh my God, the future is it's so I'm looking forward to it, but it's also scary at the same time.
It's scary.
Yeah. I mean, what happens to all the drivers out there when, AVs come and you've got this mass fleet of taxis just everywhere, no humans.
Yeah.
We already have them, in several cities in the US and China. What
Yeah.
happens when this becomes sort of, broad
Mainstream
and yeah,
everywhere.
mainstream? It's insane. Yeah, I think so. It's where um, it's a no-brainer that you need to get involved if you're thinking about investing. It's really a no-brainer. That's where you should be thinking about putting your money right now. And by the way, this is not financial advice. Whatever sort of companies you hear us mention here, whatever sort of tickers we put up there, up here, um, it's our personal opinion. Please do not invest on the basis of some of these companies that we've mentioned. You need to do your own research, like we said the last time. I'll quickly recap a few things I said in the last episode. Um, so you're trying to get exposure to AI as a trend, right? For the future, you're investing. So your frame is, like I said last week, you want to invest, you need to think about the future. Where should you put your money? How do you then do the research, right? Because you want to get exposure, you need to do some research. I'll recap what I said. There are two ways to do research. The first one is quantitative research. The other one is qualitative. Under quant, you're looking at, I would say, three things. I like to keep it very, very simple. You're looking at the company financials. When you're looking at financials, you're looking at revenue, you're looking at profits. Larry mentioned something when we're in the middle of the chaos last week, 2 weeks ago. It doesn't make sense to start looking at companies that are not making profits right now, right? But that's the chaos, right? You're not investing for the future when you're thinking that way. Um, so that's financials. The next thing you need to look at is besides just the financial statements, there are some investing metrics that you need to look at, like PE. He's mentioned PE multiple times, which is price earning ratios. I think that's the simplest one that is very, very easy to sort of digest because you can do creative things with PE if you can sort of gather that information, on a large scale. The third thing that we talked about last week and we always talk about is technical analysis. You've screened on the basis of financials and these metrics. You then do, it's not enough to just choose that company. You then need to know where is the right entry point. Do I need to wait for a pullback or should I just go in? You understand? Sometimes you just go in, like Drokemila said,
Invest and
you
investigate.
you you invest and then you investigate. I mean, that's what if that's what George Soros does, who am I? I mean, I'm just Michael. So sometimes you should also act on your gut. But then if you've got 10K to invest, you're not gonna act on your gut to 10K because then you are stupid, right? I would be stupid
Yeah.
to do that.
And
You
I think the invest and investigate, maybe a key part of it is investigate. So it's not
investigate, yeah.
invest
It's
based on
not
vibes
invest
and
and
then go
just
to
leave it
bed.
there. No, you're like, you invest and then you're like, I need to then investigate. Do I need to compound? Do I need to take my money back? Like
Or
we
you double
said,
down. Yeah.
or should you double down? So those are the three sort of teams under quant. Under qualitative, we also spoke about three things last week. The first one is the management. If your company is great, your business is only as good as the quality of the team that you've got
Correct.
running it. And I keep telling people, it's that principle doesn't just apply to startups and VC world. It applies to every single business.
Hmm.
And it's why you see, I don't know if this is controversial, but you see board of directors make multiple decisions. House CEOs. How many CEOs have been ousted, this year already? Intel, there's so many of them, and they bring in people that are sort of they've got more context or they've got more experience, and there are leaders for every stage of a business, right? Leaders to do turnaround, to do multiple things. So you need those people there. So you need to look who's what's the quality of the management. The second thing that you look at for qual research is what is the moat here. So what is the competitive advantage that this company has got? Right? Maybe the very first one actually, I've sort of put them. It's not in the right order. The first one is the business model generally. How do they make their money? Who are the customers? Is it subscription based? Is it a platform? Is it marketplace? What does the 10 years sort of period look like? When you
Hmm.
think about that business model, and then I think that sort of information piece into or keys directly into the moat, which is the competitive advantage. In terms of competitive advantage, you're looking at what edge do they actually have over their competitors? Do they have this sort of like um high switching costs? So much that there's nowhere for you to go, like ASML. ASML is basically a monopoly. There is no other company that does what they do. So
You
if
know,
you
you know what the
invest,
you know what the CEO of ASML said? He
no,
said he said the relationship between ASML and its customers and vendors is worse than the marriage because
yes.
you cannot divorce.
Yes, so that's an example of super high switching costs. There's nowhere for you to go in the world.
Yeah,
Maybe you need to go to another galaxy if you are looking for a new vendor because in this our galaxy there's no other you know
yeah,
company that does
EUV
what they do.
manufacturer. Yeah.
Yeah. So that's one. That's moat. Yeah, another example of a moat is Netflix, right? Um and with that is just are people sort of dependent? Do people keep coming back? We've unsubscribed from Netflix multiple times. Like, this is a bit too expensive, but we keep going back. And
You,
I've
you
heard
you
the
just see
same
on
story.
Twitter, somebody just says, "Oh, this show
Somebody,
is
oh, this
great."
show,
It's like,
you go
okay,
back.
let's just check.
Yeah. So, yeah. So when you think about modes, they are all around you. You just need to see. There are things you can actually sort of decipher from just everyday command. Mastercard is another one. They've
Oh
got
yeah,
the entire.
that's an
They've got the
oligopoly.
Yeah,
Mastercard
they've got
and
the
Visa.
entire market, Visa, those are modes. There's nowhere else to go to.
Yeah.
Um, so you think about that, and then I think business model, modes, and then quality of management. Now, let's apply this to AI specifically,
Mhm.
right? So what was your question? How do you get exposure? Right? That was the question you asked.
Yeah.
Now, if I'm thinking about exposure, I am basically, to be honest, I'm thinking about three ways. And the first way is broad ETFs. Um, Broad ETFs, Nasdaq. Simple. And here on this show, we're not gonna tell you I'm not gonna tell you and give you one sort of in Nigeria we say Dagbo stock. You're gonna put your money there. No, 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 no. See, we're gonna give you like the right way to do this. So Nasdaq, it answers your question. And Nasdaq is the general technology ETF in the US. And man, that shit is hop on a 10-year, 20-year basis. Like it's insane how much return that thing has, delivered. And so any company that does anything worthwhile usually tend to list on the Nasdaq. So it's all technology. You're definitely sure that in what 50 years Nasdaq is going to be there. They are going to keep sort of rebalancing that ETF to fit, that technology team. And with the way technology is going, I don't know if I don't know if we're talking which day about Deloitte's prediction. So when I worked in Deloitte, back when I was in consulting, we had these Deloitte's annual TMT prediction. So TMT is technology, media, and telecoms. And that prediction was such a big deal. I was always waiting in eagerness to read it. I'll read it, I'll digest it. And when it comes, we'll send it to all our clients, the CEOs of all of those, tech companies. For the last 5 years, there is only one thing that's been in that report, AI.
Yeah.
It's insane.
Did you see the joke
So
on someone talking, showing Sunday Pichai when he was giving like a talk and it's just AI, AI,
yeah, 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 yeah.
AI?
Mate, when I was in Dela, I think in 2017, I was still sort of like what, semi or I don't know what I was then, or just mid senior, senior consultant. It was AI. It started as AI. I was always reading, what is this AI with fascination, AI, AI, AI. It started as AI. It's evolved over the years. Now, the 2025 prediction it's not just AI, it's generative AI. So you can see this thing is not going anywhere, right?
Yeah, I
So
think we've gone past the
we've
predictive
gone past,
AI
yeah, yeah,
where you predict something based on now it's like what are you
yeah,
generating?
yeah. Let me tell you, there's an interesting chart, and I think we should show the audience as well that McKinsey had. It looked at all of the current sort of LLMs or sort of AI products that you sort of referenced, and they looked at where they were. I don't know how many years ago and where they are now. So they looked at maybe ChatGPT, for example, 2, 3 years ago, X years ago. It was what? It was single mode, right? So it wasn't multimodal, it was just text. They didn't have like they had it
Or
sort of like frail API access. They
PDI
had
skills.
so it was so weak, it didn't have like the reasoning capacity. And then they compare that to now. Now you have like superb reasoning ability from that model. You've got multiple use cases for API access. You've got multimodal, so you can give you text, image, video, whatever you
Yeah.
want, voice. So it's massive improvements. And just going back to what I was saying, like Nasdaq is following that trend. And so if you're seeing all of those sort of systems going the AI way, you can always be sure that Nasdaq is also going to go that way. So this is why I'm saying Nasdaq would still be one of the things I would consider investing in. So that's broad ETF. Now, ETF is one. Within ETF, there's broad ETF. There's also specific basket ETFs, right? There are three basket ETFs that I would look at. There is one is called the BOTZ. Um,
Yeah.
that's the Global X Robotics and AI ETF, BODS, BOTZ. Another one is the ticker AIEQ. So that's the AI powered equity ETF. There's one more. I mean, those ETFs are basically focused on AI teams, right? And by the way, you're still going to see companies like Google, Amazon, because those companies are essentially AI companies right now.
Yeah.
Um, so look at those ETFs. When you're looking at ETFs, you need to look at the fees. How much fees are you paying? Super, super important. You need to look at the composition, right? The people that are doing this, like we just really be man. They are human being like me and you. So go and check what are you investing. You need to know what Blanry said earlier. You need to know what you're investing in. These ETFs are just basket of stocks. What stock and what percentage are you comfortable with those allocation? If you are and you like the fee, take the fee. Or just say, well, I don't like this. I trust Nasdaq. I've seen how Nasdaq has performed over time. Almost no fees for Nasdaq. Just go with the Nasdaq. So that's ETF. The second way that I would think about investing right now or getting exposure to AI is via the standard, stable, futuristic looking companies, the big tech, right? And when I say big tech, you're talking about Mark 7, essentially. You're talking about Google. We've been talking about Google here. Larry mentioned something just a couple of minutes ago that he doesn't think Waymo is priced into Google. I don't think so either. So those companies still have lots and lots of runs You also mentioned, I don't know if it was here or in episode 1 when you said the PE for Google is about 17,
Exactly.
which is insane.
Yeah.
The S&P in comparison is what? Is it 23 right
20s.
now?
Yeah.
20, yeah. And so, are you
It just
saying
doesn't make sense. Yeah.
are you saying that on the average, the S&P is going to do better than Google?
Grow
Man, I don't
faster
think so.
than, yeah.
I don't. Yeah, are they going to grow faster than Google? I don't think so. So there's room for those companies to run. We've just seen what happened with Tesla. Tesla was down what, 40 something percent or almost 50%
Yeah.
year to date. And all of a sudden, in the space of 1 week, they went up what, around 20%, despite a terrible earning
25.
result. 25? Yeah, I'm not sure. It's just crazy. It wiped out my short position, by the way. Um,
I warned you.
let's not talk about that. But I mean, yeah, it's so think about those companies. Look at when you're comfortable. Look at all of the framework that we've tried to keep it simple with our quants framework. Don't just go in and jump in on the basis of this video. Observe, is there a pullback? Think about it, you know. And if you want to investigate and then, sorry, invest and investigate, up to you, whatever you want to do, but do your research properly.
Yeah.
So Google, Tesla, obviously Nvidia, AMD, and the other big tech companies. I would suggest you should look into. The third one, which is a bit more risky, which I'm keeping for the last for obvious reasons, is there are smaller companies right now that have got crazy
Growth
opportunities for.
prospect.
Yeah, they've got massive upsides. um by the way, Adobe is looking super interesting, Larry. You should check it out. Maybe after the recording we should look at it together.
Yeah.
It's looking interesting. I think I'll yeah. So the smaller companies, there are loads of them. We're only going to talk about public companies here. Let me quickly share these actually, and then we can
Yeah.
see how things are looking. Let me share this on my screen. Just give me 2 seconds. Um, Larry, if you're thinking about smaller companies now, what comes to your mind? A smaller company with massive upside.
Yeah.
What would you
I
think
think
about?
I think when I say smaller companies, I mean that relative
Yeah.
um to the likes of Nvidia that are trading at $3 trillion. And when I say smaller companies, I don't necessarily mean some random company that is like
No, no,
$200 million in market cap. I'm
absolutely not.
talking companies that maybe in like $30 billion, and then have moats in their areas of expertise. So for instance, and I think I kind of gave a rundown of some of that value chain, like semiconductors and things like that. So if you go to semiconductors and you say, well, I already have in chip design, for instance, you have Nvidia and AMD. Like I said, I think no one person is going to win inference like we did with training. I think there are going to be multiple players in that space. The big tech are going to come up with their own chips, like we're already seeing. There are literally Dojo supercomputers that Tesla already has, and every other big tech is coming up as well. So I would think that anyone, I mean, for me personally, having Nvidia is not enough. I think I'm going to diversify a bit of that into AMD. Because I think AMD is a smaller cap, and I gave a very simple, logical example. If the entire inference market is $3 trillion, if Nvidia wins 100% of that, you double your money because you go from 3 trillion to 6 trillion. If AMD wins only 10% of that 3 trillion, you add another 300 billion into the market cap, and it's currently at 100 billion or something like that. So now you have 3x versus 1x with Nvidia. So it then comes back to what are the odds that Nvidia wins 100% of the market versus AMD winning 10% of the market. I prefer
Mm.
my odds with AMD. And I mean, that is not to say that Nvidia has only one thing. Like I said, Nvidia is a compute company. Most people think of it as just creating GPUs and things like that. I'm saying that it has so many things, there's so many partners. They're working on drug research. The way that we do research for drugs have kind of changed or is changing. They're creating Omniverse and all these things. So I would be looking at, on the design side, I'll be looking at AMD. On the cybersecurity side, I think we had this conversation. I'm looking at Zscaler because I just think they're the most important cybersecurity company. Um, from an AI perspective, they're not the biggest. Palo Alto is there, is big as well. CrowdStrike. There are a couple of players, but I just think Zscaler has a good opportunity. And then maybe lastly, I'll go to um testing. I think Teradyne is another company in testing. And no, maybe not the last one. There's just so many companies.
Yeah,
I'll go to
let me
memory. So
memory.
memory,
Yeah,
I'm
of
going with
course. Yeah,
Micron.
yeah.
Um, and the good thing about the AI semiconductor space is it's almost always an oligopoly. There are
Mm.
always like two or three players, right? It's not where you have 20 players competing with themselves. You can argue that TSMC is almost a monopoly. You can argue ASML is a
Oh,
monopoly.
absolutely. Yeah.
You can argue
As
that
far as
even
foundries are concerned, TSMC is definitely,
yeah, you can argue that
yeah.
Nvidia from a training perspective is almost a monopoly because
Yep.
everybody wants their chips, you know?
Yep.
So Micron is the same thing. I think there are like just three players in that high bandwidth memory
Yeah.
game.
Memory space. Yep.
Yeah. So
And
I
it's
mean
Micron, Samsung, and one other
Samsung and
player.
this one
Yeah.
Korean company, I think.
Yeah.
So
Yeah.
yeah, there's the good thing is so for me, I'm going for from a small cap perspective, I'm looking at the companies that have higher growth potential, but are also important enough and have a stable balance sheet and good management.
I like what you're
So
saying. Yeah.
so yeah, that's the way I think about it, from
I,
that value chain, perspective. But there are many players and maybe
yeah.
you can share.
I like it. I like what you're saying here. If I look at this image, all I see is just opportunities everywhere.
It's tough. It's
It's
tough
very,
to
very similar to, I think it's slightly different from your framework, but it's essentially the same thing. You've got the AI application layer, you've got
Mhm.
the infrastructure layer, and then you've got the hardware. So if you look at
Yeah,
the hardware, you've got Broadcom, which looks like there's massive upside on Broadcom right now. Not as big as AMD and Nvidia, right? But there's Marvel as well. We've got data center auto businesses as well, and then obviously we've talked about TSMC.
yeah.
If I'm looking here, you see the reason I was saying that we need to look at Adobe is
Adobe.
I look at here, you see Adobe here, on the application side. Um, yeah,
Yeah.
and I know that stock has been beaten down recently, crazy, crazy beaten down. Because everyone has given up on them to say AI is really just gonna make them redundant. But I don't think so. I think they are also cooking, stuff in
If you're not cooking
everyone,
now, you're gonna be the
every
BlackBerry of
yeah,
smartphone
absolutely.
era.
Yeah. So if I look here further, you see service now. Service now went up how many percent
Oh
in
my
the last?
goodness. That's the one
Oh,
that hurts me.
we spoke about service now, Larry and I. And as Larry was speaking to me, I decided to invest. I was not waiting. I was speaking to Larry and I invested in service now. I'm up 18% on that investment right now. 18% right now. I invested straight away. This is invest and then investigate,
Invest and
right?
investigate.
I am up 18% and I'm not selling that shit anytime soon.
Oh man.
Shopify is also up. Massive, massive run. You've got HubSpot, massive company. This company, superb. I looked into them a couple of months ago. I need to go back into looking at them and seeing if
Mhm.
there is an opportunity there. UiPath, massive, massive, beaten down in the last couple of months. I honestly don't know. So this company actually, they do robotics. They were engaged with Deloitte at some point, 2 years ago. Got
Hmm.
some certificates in um, RPA, robotic process automation, which is one of the layers or the benefits of AI. One of
Yeah.
the things that AI would power. So this company is one of the best in the world in RPA, and but they've been beaten down recently. So Adobe, I know I saw Adobe multiple times. You can see Adobe here, but you can also see Adobe here. So I think
Oh
Adobe
yes.
is is
I
is
think that's the
is
beauty of this everything.
yeah,
Like
yeah,
Google is in robotics, they're in LLMs, they're
yeah,
in self-driving, Same thing with Amazon. They have their
yeah.
own. robotics business. They have Zoox for self-driving. They have their own internal usage for it to optimize advertising. So,
Yep.
I mean, I remember having a conversation during the MBA. I think it was with Aris, and it was a conversation of we used to have the oil companies being the most valuable companies in the world. And that
Yeah.
kind of transitioned into the tech companies. And the
Likes of
question was,
Exxon.
are we going to
Yeah.
see a period where we transition away from the tech companies into another set of companies that will be the most valuable in
Mm.
the world? And I think my argument then is no. we're going to have the tech companies keep leading. And this is the exact reason why. Everybody is playing in everything.
Mm.
Now, in addition to just even all of those use cases, they are all also developing their own chips as well.
Larry, I like what you're saying. You remember when we were talking about Google last week, and we say this is a disciplined capital allocators. I don't see these companies as just companies anymore. It almost feels like they are
Yeah, yeah,
they're able to preserve that startup part of them.
yeah,
So they have incubators within these large companies that keep looking for the next opportunity.
yeah.
SpaceX created what do you call them? What's the thingy
Starlink.
with Starlink? And but guess what? Amazon has Project Creeper that does exactly what Starlink does, and they are commercializing at a massive scale. And
They're
trust
still
me,
far from Starlink
yeah,
though.
they're still far, bro. Man, you know
Starlink
Amazon, man.
is a
But
different beast,
you
but
know Amazon is a beast, right? So you know that
yeah.
you're gonna come for some share there.
Yeah,
Um,
yeah.
so I mean, these companies they are capital allocators, they are foundries and
Efficient.
incubators,
Um,
and they are doing it very, very well. But I mean, if you're so these are like smaller companies versus these bigger, larger big tech, companies that we're talking about here. A lot of these companies that you can see on this image. There are other ones that, Larry and I, frequently look at that. And like Larry said, these smaller companies have high growth potential and massive upside. But the downside of this is they're also risky. So you need to be sure about your entry points. You need to be sure that you're investing in the right company and you need to monitor it actively. There's companies like Tempos AI, the one Nancy Pelosi, invested in and went up like 50%. That company actually, has so it's looking like they might have a moat as well.
I'll pay anything to
Um,
see Nancy's trade before she trades.
Absolutely, man. Anything. I'll give her half of my portfolio. Just give me one stock.
Just tell me before you
I'll
buy.
make it
So
back.
let me
I'll
see.
make it back. I'll give you half of my portfolio. Give me the name and I'll buy, and then I'll double the money. So yeah, so Tempos AI, there's App Loving. There's there are lots of them, to be honest.
Yeah.
Yeah, Tempos AI, App Loving. Which other ones do I have? Do I actively look at? Um
Yeah, there are a couple of
the
names. I
smaller
mean,
ones, yeah. SMCI, is one of them. Um,
I don't know. I'm just not. I'm not very. I'm not there yet with SMCI.
yeah, there's Lam Research. This is an older company, but they just keep coming back. There's MongoDB, you
Yeah,
know,
that's a good one.
yeah. So these are companies that you need to. There's ARM that we've not even talked about. That's just sitting there, massive, massive,
ARM is
great company.
yeah,
There's Intuitive Surgical, ISRG. You were looking at that a couple of weeks ago,
yeah.
right?
I
Yeah.
was.
Um,
I
yeah. So
think
this
even
lots.
just the software for designing chips as well. I
Yeah.
think we have companies like Synopsys.
Synopsys. Yeah.
And,
I invested in Synopsys recently. Yeah.
um, yeah. So for me, the way I would play this is, and I mean, I think maybe we'll share like how this looks on the chart, but it's really just understanding the entire value chain, seeing where the value would be. Again, in the absence of the differentiated opinion, your best bet is to diversify.
Hmm.
And if you're trying to diversify in industries where you have players where the market is essentially an oligopoly, then you have maybe two or three players. So it's
Hmm.
not very difficult to choose who you want to invest in. If you want to invest in chips design, for instance, there's not many options. There's like a handful of them.
Yeah.
Nvidia will be there, AMD will be there, and then maybe you're talking of AVGO and some others. But there are not many, you know. And then the question we then ask yourself, well, who's going to win the inference market? No one knows. I mean, if you ask some people, they'll tell you it's Nvidia, they're still gonna be great. If you ask some people who say, oh, AMD is gonna take a while. So no one knows as far as I'm concerned. And when I don't know for a fact, and I don't have a differentiated opinion, say I do know this for a fact. What I do is to own both, right?
Mm.
And at some point it gets clearer who is actually gonna win this. At some point, it got really clear. When I started to talk about Nvidia and AMD in 2020, I had no idea who was going to win it. But I think 1 year, 2 year down the line, it was obvious that this was Nvidia's market, you know. So, and I think that would happen to most of these players. For some of those other industries, I think there will be multiple players. And I think it's really identifying the value chain, knowing who are the 2, 3 players in this space, determine what the market structure is. Is it an oligopoly? Is it fragmented? Do you have so many players where it's difficult, there's too much competition, and you just can't, you know, you can't grow your margins because you just have too many competing factors. So that's the way that I think about it, and that's how I landed at some of these companies. You mentioned that we talked about ServiceNow. That's how you land at all these companies. You're trying to figure
Hmm.
out who has the moat here and who are the players and things like that. So I think as far as picking winners or picking potential companies in this space goes, I tend to just create a map of, you know, who are the players in the space, and I just pick two or three, mostly two players, two top players in each of those in each of those industries or sectors.
Nice conversation, man. How many hours have you done? We'll
You
see.
know,
We'll see.
when you just keep talking about things like this, time just flies by.
Flies, flies. Yeah, but I mean, good chats. I'm looking forward to the next deep dive. I think maybe robotics or energy.
Yeah, robotics or energy, we can do
Yeah,
energy for sure.
yeah. Cool.